There comes a time where I think you just gotta listen to me. You know what I'm saying? You know what I'm saying? You listen to the earnings reports to watch video, and you get to see here. I tell you to get out of this stock, right? I tell you expect some bad earnings, and what a shocker, down 10% after hours. I knew it was gonna happen. But to be fair, the stock did rise 6.8% in the normal trading session, so it leveled it out a decent bit, all things considered. Just a stock that is, really since the hype period, which again, you can look over a year's period, you see the mega hype period, but they keep getting resurgence. But overall, still from its peak, the stock's down 95%. And there was a time, obviously, in the market where weed stocks were like, this is the new thing. This is right as I was starting investing, too. And weed stocks were like, this is the up and coming. Turns out these have been hammered since. So hopefully there was no long investors that have been in since those highs. I sure hope not. But if you're one looking to initiate a position, maybe you're excited about this drop. Let's look at these earnings and see if it's even worth potentially going into. So, not good numbers here, I can't lie to you. GAAP EPS of negative 66 cents, misses by 39 cents. That's rough. I can't lie to you. That's an awful profitability number. It's very bad to see really a decrease in profitability perspectives here. That's my main issue with these stocks always, is the fact that really none of these companies are profitable by any means. And I'm concerned with exactly where that profitability is going to come from. Because you can see here, revenue of $50.4 million, which is actually a 10% increase year over year, was a miss by $4.5 million. But the number that kind of shocks me is total kilograms equivalent sold increased 105%. So the amount sold increased 105%, but revenue only increased 10%. And I think some people might look into that and question. Obviously, it's got to do with product mix, right? But the concern is, why is revenue not growing that high? There's valid reason to be concerned there, as far as those kilograms sold numbers compared to the revenue. Definitely something you need to read into, which we will during this report. I'm interested in reading into this and seeing what exactly the rationale for that is, what's going on. The cannabis sector alone there was a 16% increase. Adult use saw a 17.3% increase, and just the hemp portion of the plant grew 1.5%. Nothing massive there. Increased 104.5%, pretty massive. Net selling price per gram, though, fell 42%. That's pretty crazy. Net cost per gram, though, I gotta say, one thing you need to mention, net cost per gram also fell by 46%. So the profit line's still there. I mean, you see, overall, they would have gained in profit because the cost per gram fell more than the net selling price did. But you do need to be concerned then, obviously, those falling numbers, how much does that go down, right? How much does that fall? Don't know. Net loss of $81 million. Yeah, all things considered, not the end of the world, but I don't like when you see a net loss that's 1.5 times higher than your total revenue for the quarter. There's definitely some concern to be had, and really a lot of it. Cash and cash equivalents at quarter end of $137 million. We'll look at the balance sheet. Concerning, because I have a bad feeling they're raising debt for this. Even the non-GAAP EBITDA loss of $12 million. Not beautiful, but you'd like to see more. Quarter three consensus is a net loss of 37 cents and revenue of $60 million. Not much growth there, and the EPS line, not a huge fan of it. Guidance doesn't crush here. So let's look into this a little bit more and find out what's going on. Net loss increased $45.4 million versus quarter two of 2019, partially due to facility closures and inventory adjustments. Facility closure, I'm not sure. Again, this company operates a lot in Canada too. I know in the U.S. they didn't shut down any dispensaries, just 100%. Out of the ones I noticed, I don't go to them, I don't frequent, but I know as far as I was pretty up to date on news, right, as far as everything going on pandemic-wise. And to my knowledge, dispensaries were not anything that was required to close. So some of them might have done it, by themselves, but I don't think they were required to, at least. The adjusted EBITDA loss is a 32% improvement compared to Q2 of last year and Q1 of 2020. $137 million quarter two ending cash balance. Interesting. We'll look at that, no doubt. So, from their CEO, since the beginning of 2020, we've taken bold and significant actions to position Tilray for future growth and success. We have focused on reducing cost, driving international revenue growth, mitigating COVID-19 related challenges, and improving our net loss and reported adjusted EBITDA. You did not improve that net loss, I'll tell you that right now. Get out of here, you pop-ups. So, today's results demonstrate significant progress in all of these areas. No, it's not significant progress. Your net loss rose. Quit lying to me, you dirty liar. Sorry, I'm being too rude. Second quarter highlights. They specifically mentioned the increase sold through of cannabis. Don't know why that's necessarily the main thing that they're talking about, when obviously adult use grew pretty high as well. So revenue decreased 3.2% compared to the first quarter, generally driven by a 15.8% decline in adult use sales and a 5.3% decrease in Canada medical sales. Definitely a concern there, quarter over quarter, because their first quarter was also in the initial wave of everything, especially Canadian. They had that first initial wave. Since then, they haven't had quite the resurgence necessarily. So, definitely a concern that they saw a decrease from Q1, in my opinion. And, it's up to interpretation. That's my opinion on the matter. But this is, it's involved with it. So, medical were largely attributed. Sequential sales decline were due to pantry loading, as they say, in March. People were buying a lot in March. But even then, the sales were not a smash out of the park, so I don't know if I necessarily get that. Are people just going to the dispensary and stocking up on weed because of a pandemic? Maybe some, but I don't know if that's necessarily the case. That's my opinion on the matter. I know they want to stay positive, but overall, here they give you a nice 3 months ending change. So the main growth here, you see a big change in this international medical, 349% increase. Definitely one thing that needs to be noted. That's quality there. Total cannabis revenue, 16% growth, and hemp only saw 2% growth. Not significant for sure. But again, the cannabis sales is what they're after. So total cannabis sales increased 105%, as we mentioned. I do want to see where they talk about price. So average net selling price per gram decreased compared to $4.61 prior, or Canadian $6.26 in the second quarter, and it was at $5.28 in the first quarter. So the decrease was driven by a one-time bulk transaction associated with the termination of a supply contract. So excluding the one-time transaction, average net selling price increased to $5.03. So they do tend to block that away, right? They block that away, saying that it was just a one-time. They had to buy a lot from this person, and they had to buy it. They bought it cheap and sold it cheap. That's really what they're saying. There is an issue with a bulk transaction. So I don't know. From my perspective, I don't know why their selling per gram would necessarily see that big of a decrease then. I don't know. That's my question on the matter. Was it lower quality? Again, I don't know. It's not really a good use of... it's not a good way to explain it, in my opinion. I don't know. Unless they... I don't know. It just seems weird to me. Maybe I'm reading into it wrong, but I just don't know why it would decrease that significantly. How bulk was this transaction? I don't know. I don't know. But average cannabis net cost per gram decreased. The decrease was driven by a one-time bulk transaction associated with the termination of a supply contract. Again, to me, I don't necessarily know if I get that. Really, just because of the fact that if you bought it bulk and got it cheaper, I don't know why your net selling price would be cheaper. If you sold it in bulk and sold it for a cheaper cost, I get it, but I don't necessarily know where that falls. So I'm very curious on that. But they said other than that, it decreased to 342 instead, which is still a decrease, but I don't know. Makes me feel interesting. So maybe that's why the revenue bumps for next quarter aren't quite that massive, and if the overall selling cost is going to be increasing that much this quarter, I don't know if I understand how the revenue would not jump even higher. That's maybe I'm imagining that. Gross margin decreased to a negative 10.7%. We took an inventory write-down of $18.6 million. So that means they have extra $18.6 million of the Mary Jane just lying around. Or maybe that's really the valuation that got written down. So it's cheaper per gram. That just doesn't make sense. Everything is pointing to cheaper per gram, but I don't know. Maybe I'm going crazy here. Net loss, a 45.4 million to 81.7 million. So that 81.7 million compares to 36.3 million in the second quarter of last year. So the increase did double. You doubled the net loss, so that could be a concern there. I do want to take a look at the balance sheet because, again, they talk about having an increased cash position. If you look at the total current assets on this company they give me, this is in U.S. dollars. Look at them. I'm proud of them. This is a 6 months ending number, 289 million. 289.7 million versus 259 million. You saw an increase of around 30 million there. Good to see that. Total assets in general did decrease though. So again, they just called on some of their long-term assets, specifically you can see their intangible assets saw a decrease quarter over quarter, over the past 6 months, I should say. So they drew down on some of that, and that might be part of it. So they decreased to 855 million versus 896 million 6 months ago. Liabilities, I'm very concerned about the rising liabilities here. Potentially, you see total current liabilities of 163 versus 92, so a pretty big increase in total current liabilities. Current assets do outweigh by quite a bit, I'll give them that. But overall, total assets saw a big rise, 724 million versus 611 million. You saw an increase of 112 million, while assets decreased by 50 million. So 40 million. Okay, I'll be fair, 40 million. Assets decreased by 40 million, but they increased their liabilities by 110 million. So that is a very, very not good thing, in my opinion. So stockholder equity, it's not a beautiful number. We're talking about right around 130 million. The balance sheet is not looking good. Yeah, stockholder equity of 131 million compared to 285 6 months ago. I don't like the place that this stock's in, especially if they're calling for another net loss in the next quarter. And I'm still concerned about the average selling price there. They're going to justify it as a bulk transaction, but I just don't know. It doesn't add up with the projections they're giving, in my opinion, as far as estimates. But that accumulated deficit number is looking bad, and I think it's just going to continue to grow. This balance sheet's not looking beautiful for me. I can't imagine. I know the stock's low right now. I just can't imagine buying it right now because I think there's a lot of weakness in this company. So I'm saying stay out of this thing. If you find it a good buy point, maybe I could get it. I just don't know where the value is in the stock for a while, right? Investors are beating down on this thing hard for pretty good reason, right? It's not a good-looking balance sheet. The company looks to be in some turmoil. Not saying they're not going to make it, but just not a huge fan of what's going on with this company. But hope you enjoyed.